Hey, what is up, everyone? This is Due Diligence here, and I know it's kind of late. I'm just making this. I'm trying this new format where I just sit here because I sent my roommate to or housemate to the ER because he fractured. I think it's at the most is partial tear. Is my one of my parents is doctor, so then I check his bones, which will be fine, and then he's like, oh, we gotta go to the ER. So then I accompany him to the ER. And since it's COVID, visitors cannot really accompany the patient, so I can't really talk to all the cuties, all the cute nurses there. So I decided to make this video because I'm bored and I don't really want to keep reading my books. So this is just going to be a reflection video that you guys can, pick up and watch or whatever. It's going to be super short. I'm going to talk about, some things I picked up along the way over the past few weeks while I trade energy. You guys all know that, 2 weeks ago we had a very huge run on XLO and other energy stuff, right? And then last week on Friday, we perfectly predicted where BOYO was going to go. A lot of you made a lot of profit, including like 120%, 200%, whatever, depending on what option you buy and what entry point you bought at. And then deep down in my head, I was like, I know where energy price or the natural gas is going to go, because we have 4 major reasons that natural gas cannot stay at, the lower, I think, if you trade natural gas future contract, you all know that at one point natural gas was $4.7, which is extremely low. The healthier range is around 4.9 to about $5.2. So then if you translate to BOYO, then you know that the actual fair value price for BOYO is somewhere around $55, and you will probably aim for upper 60 range. So what we did is we bought a bunch of $50 call options and $55 call options. I mean, it all looks really good on Friday, but then, a lot of you took profit and everything, but I decided not to do that. I decided to actually hold it, because my prediction for this week is I think it's going to go to the upper 55s, somewhere reach like 57, 58-ish, maybe 60, depending on how the international market is going to squeeze it, or the entire general commodity market is performing, and whether when oil is going to rebound. And we all know that oil is going to rebound because the US retail oil price is going through the roof right now. If you go to Costco, if you go to Shell or anything, especially if you're in California, the premium oil costs literally $5.25 per gallon, which is literally 25% higher than before. And if you go look at other places, all of the energy prices are actually surging. So right now, the reason why it's actually going temporarily down through a correction is because a lot of people are basically long squeezing the market, and then they're expecting a lot of people going long, and a lot of big firms are going long. Their expected price range for oil is around $90, and heavier the Russian side, they think it's aiming for $100 per barrel, which I think is possible, but a lot of people are suspecting that Fed is going to increase their interest rate earlier, which I think is probable, but not that fast yet. I think the earliest it can go is probably January, late January, mid-January, February-ish, if inflation keeps worsening. And I think inflation, it's not really going to get worse, it's just going to stabilize and reaches about a 7.8% line that I outlined it about 3.5 months ago. You guys can go back and look at the analogs of the videos, and I talk about inflation and everything. Apparently nobody really cares about macroeconomic condition. I honestly think that's one of the most important things to really learn to determine macro-wise, so then you can know what to really invest, like what sector you can invest. Like, for example, if you just don't want to invest in individual stock, what you can do is pick a sector, and you know that, okay, so taper is happening, maybe interest rate hike is going to happen, so I'm going to readjust my portfolio to most of the banks and financial institutions, because they're not considering the NASDAQ, and the general equity market is probably going to go down. So I probably will just pile up some, short-term or medium-term future that are shorts, and then you buy those really, really cheap shares, the ETF shares that are around like $10 or $12. It's not really a good timing to short the market, because if you actually start shorting the market, you either can buy the puts or start actually short selling. But if you actually start short selling, things gets a little bit more complicated. Consider how theta decay works, and we're actually not 100% sure that it's going to increase the interest rate in January. But anyways, go back to natural gas. It's a very different story when you're trading futures than you're trading options. Because in your options, it doesn't really matter how accurate your price predictions are. Like, you guys all know that my price predictions are really, really accurate, right? I literally, on the channel, I have about like a 90% accuracy rate on a lot of those price predictions. But the timing sometimes is really awful. So in order to be really good at trading options, you have to actually either give yourself extra time, which means you have to pay for extra premium when you're buying a call option, or if you're buying a put option, right? You gotta get yourself, for example, you think it's gonna get there in a week, probably it's gonna take 2 weeks, so you gotta pay like, about 15% to 20% more theta, which means 15 to 20% more premium if you're buying a call option, and if you're selling option, that's a totally different story. But at the same time, right? So go back to the natural gas story. So the ticker symbol we're talking about is BOIL, right? So I hold the $55 call option, and then on Monday we have an equity market rush. We have people going back to the Nasdaq, and they're trying to reduce their position in commodity because the Iran policy deal coming out, right? Because Biden is loosening the Iran policy. So whenever Iran policy will loosen, people are really worried about, are they gonna sell their gas cheaper? Are they gonna sell their, energy cheaper? If they're selling them cheaper, then that means a lot of people are gonna buy them. If a lot of people are gonna buy them, that means it's gonna generally drag down the entire commodity price in the entire market, which actually will make the inflation better. But in this case, it's not, because in order for Iranian oil to reach US oil, it at least takes about a month and a half. And due to the international shipping problem, a supply shock we're still facing right now, that means the oil stabilization is not going to happen until about late December. So if we use that logic, natural gas prices are complementary of oil. That means it will definitely go up, but due to the market flow on Monday, it literally dropped to 48 or 49. That means all my $55 call options and $50 call options, they reduce about 50% to 60% in value. And then, when you're trading those higher risk options, especially, we're not really just doing in 1x, we're doing 2x leverage with the ETF, because BOIL is 2x leverage, right? And then with the option leverage, you're literally trading on 4x leverage. So then, as someone who's a little bit risk averse, and I have a principle on options that whenever it decreases by 20%, I would need to reposition, adjust strike price, and then sort of extend the call period, extend the expiration date by either a week or so. But the problem is, BOIL trades on monthly, so I need to pay way more than that to literally, get my desirable outcome. But I don't have enough liquidity on hand, because I also have some other bets that we're going to talk about later on this week. I think it's going to come to fruition, or maybe it won't, right? We see some company CEOs leaving, insiders selling, and I'm making some hefty bets on people are going to overreact. But anyways, going back to natural gas. So what I did is, I basically sold half of my position on BOIL, and then used the option principal amount to buy a not 2x leveraged ETF on natural gas, but 1x leveraged ETF. That means if actually I'm right about the natural gas prices, it's going to go back to the price that I wanted to, or I predicted I would. That means I will probably make my money back. But that doesn't mean that I will also accrue around 15% to 10% losses. And it turned out that on Tuesday, the price stabilizes at a drop. It basically went up and then went down again. And in option language, that literally means that your option premium is going to go down. That means all of the call options you bought is going to worth even less. So right now, I'm only at 30% of my principal right now. And as someone, I think when you're trading commodity, especially with leveraged commodities, what you're really trading is not your knowledge. We all know that my knowledge and macro sense are correct. But I think what I did wrong is, instead of adding position, I contracted position and then basically leveraged down to a lower leverage ETF, which will yield me less reward, but also get me less risk, right? So then I basically contain my my total amount of loss to around $1,000. But that also reduced my total amount of award, if I'm right, lessen it, basically. So basically, I could have made about 2.5K, right? If I'm right, which turned out today that I'm totally right, and everybody on Patreon and Discord is praising me. But I'm just making this video on YouTube and telling you guys that a lot of time, even though I'm right, during execution, if I don't execute right, I also end up losing money. So today, I think people on Discord started making money, but because the way how I adjusted my portfolio, I actually lost $500 instead of winning $2,000. If I just stay put and not do anything, I'll make 2.5k actually. But I actually adjusted and doing the right thing, which resulted in me I yielded about a $500 to $800 loss. So if you do the opportunity cost, I actually not only lost 2.5k profit, but I also lost around $500 to $800. So in total, I actually lost 2.3k if we count the profit. But again, if it's just something like, I think a lot of people misunderstood trading as something that you can get rich overnight. Even you are like completely right, your mathematics are right, and you have like very forward insights into the market. I think it's totally undoable because a lot of times it's more psychology than you think, really. And also it's more about your risk profile. I think the fact that I put up around like 10% of my total portfolio to trade on this segment of options, I think it's actually quite risky. I think that's training my risk profile a little bit, okay, at this point. I think if I just mitigate or lessen my total trading amount of this type of option to about half of my position size, I think I will be totally fine by just holding on to it. This is why this is like a cautionary tale for you guys. If you guys follow my trades on Patreon or look at my videos, decide to get into options and ask me questions on Discord or whatever, or Patreon, right? Because in Patreon you can ask me questions directly and I'll answer them as timely as possible. Make sure you enter very, very small positions, because a lot of times, especially during very volatility hours ahead, we will have a huge volatility spike before Christmas, by the way, guys. So keep tuning in that. And then if you're trading volatility, it's literally like, make sure you get your pain meds and make sure you get your heart attack meds, because it's gonna be a volatile rise ahead. And I think this is it for this video. Hopefully you guys like it. At the end of the day, we didn't really messed up a huge amount. We just basically did a lot of risk mitigation. I think I learned risk mitigation from my losses in MMAT. I think it sort of made me pussy a little bit, but at the same time, trading is a survival game. We still want to survive until the end, which means in perpetuity we want to survive as long as possible. So then later on, the longer you trade, you actually will make consistent profit. Because right now we know the situation, and later on, maybe in 1 or 2 years, we come back and look at the same video and be like, oh my god, we learned about this, and we wouldn't make the same mistakes, right? I mean, I was very, very confident on my price prediction. I mean, it turned out to be right, but at the same time, a lot of times it's about like, can you handle the pressure? Can you really handle the pressure that maybe in 2 days your theta is going to eat away all of your options, and it's a couple of $1,000 just down in the drain, or it will make you twice the amount of money, right? Alright, I think this is a little bit heavy and intense for tonight. It's around midnight. I'll let you guys go. I'll upload this when I get home, and see you guys on the upside. Tomorrow I will make more videos. I will make some MMAT, because I think the stock is actually underpriced or undervalued a little bit in terms of enterprise value. And turns out that George sent out some video out about he's gonna adding some portfolios. I gotta talk some salt about that, because I think he might get in trouble for SEC. But anyways, those are for other videos. And I will introduce you guys to 4 other IPOs that I think might be a good run, but kind of iffy because Expensify is really hard to come by. And I will make a video on Rivian. Turned out that I made that video about Expensify, and I talked about Rivian have a 35% top gap, and it reaches the top gap. And let's see if it's actually going to reach $200. If it does, then there's going to be some very interesting stuff happening. Alright, see you guys on the next time.